Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A second bullish white soldier on Friday and a suitable follow-on higher to the previous session's bullish opening white Mariposa and Dragonfly Doji combination. The market used the congestion at 106.13 as a base to punch up through the 2020 low at 106.36, the descending short medium moving average currently 106.49, as well as the April 2020 low at 107.25. Finally finishing at the upper bull channel line, currently 107.57, of the recently highlighted October-based bull channel, currently 105.55 to 107.57, which is highlighted in green on my daily chart. The market nevertheless closed above all those resistances, which are now supports. This action is as a result of the recent breakout of the previously highlighted mid-July to late October bear channel. I say it's highlighted in bright red on my daily chart. Now, I had previously laid out some potential topside targets for a breakout from such a bear channel pattern. Thus, you have a primary target X in the 107.10 area with a secondary target X1 in the 108.05 area. On Friday, we saw the primary target X at 107.10 reached and exceeded. The secondary target X1 is still live at 108.05, but it has some pretty heavy-duty combined resistance up there, with the medium moving average currently at 108.02 and the long moving average currently at 108.04. Right now, they're doing a dance as to whether to form a dead cross or not. Now, so far today, a small follow-on higher, utilizing the April 2020 low as a base and testing the upper bull channel line again. Cable, aka sterling against the US dollar. A really strong bullish Mariposa on Friday and a second bullish white soldier. It was a continuing follow-on higher to the recent indecisive doji cross that was also a Dragonfly doji in disguise. The market, surprisingly, utilized the support of the short moving average, currently at 121.87 for the move higher, and punched up and closed over the June 2020 low at 122.48 and the 50% Fibonacci line of the June 21 to September 22 move at 123.16, plus the declining short medium moving average, currently at 123.24. All these resistances are now supports. What is essentially significant has been the market's strong move upwards out of its recent range between the May 2020 low support below at 120.73 and what was then the overhead 50% Fibonacci resistance of the June 21 to September 22 move at 123.16. If this move higher is sustained, then we have a significant move higher and the end of the recent wide-ranging indecision. Overhead, we now have a very interesting piece, actually, two very significant pieces of resistance: the flatlining long moving average currently at 124.35 and the slowly declining medium moving average currently 125.39. These would be the next levels to watch on the upside. This will all be in relation to the action since late September to date, once this move up is confirmed, of a double bottom pattern, Adam and Eve type. For such a pattern, there is a primary target X in the 124.85 area and a secondary harder to reach target X2 in the 125.60 area. I've also decided to, X3 that should be, yeah, X2, that's fine, X2 is fine. Because I've also decided to retire target X1 at 116.05. I've been threatening to do so for quite some time now, and right now seems an appropriate moment. So far today, well, a continuation higher after a lower start, and the market is getting ready to test the long moving average overhead. Euro sterling. A bearish engulfing pattern on Friday, which wasn't that hard to do, as the previous session was an indecisive spinning top, which admittedly some could see as a bullish engulfing pattern. Interestingly, Friday also saw the market try for a 9th time in about 2 weeks to punch up over the April 2021 high at 87.19, but again failed to close, as instead of attacking a resistance, the market instead chose to utilize that resistance as an ammunition gathering exercise for a move lower, and in the process punched down and closed below the long moving average currently at 86.89, the April 2020 low at 86.69, and the lower time highlighted in bright red on my daily chart of the That's currently 86.74, the late August to early October bullish Andrews pitchfork. On top of all this, Friday's actions created a weekly key reversal down for last week. Now, the recent idea I raised that the move since early September might be a bullish halfway hesitation, on top of the recent roof pattern, is seemingly no longer valid. Thus, the potential target's topside for a bullish halfway hesitation of X2 for this pattern in the 87.95 area, and the overall bigger pattern, the June to September roof pattern, with a harder to reach secondary target, X1 at the 88.18 area, these both will now be retired. So far today, a move up over the April 2020 low to the broken lower time, but only seeming to gather ammunition. So there's a lot of that gathering going on at the moment for a further move lower. The key levels below are now the rising short medium moving average, currently 86.40, and the October lower 86.14, and the nearby slower rising medium moving average, currently 86.15. US dollar against the Indian rupee. A key reversal down on Friday, which wasn't that hard to do, given that the previous session was an indecisive spinning top, though it did offset the idea of the previous two sessions being a two-day meeting lines pattern, typically a bullish pattern. The market once again tested up through the October 2022 high at 83.27, but this time it was not a try to go higher, but an ammunition gathering exercise. There's a lot of this ammunition gathering exercise going on. An ammunition gathering exercise for the attempt lower, closing below the blue highlighted upper trend line extension, currently at 83.21, of the late July to late October ascending triangle pattern, and the flatlining short moving average, currently 83.20. However, the move lower did not reach the next support, which is the slowly rising short medium moving average, currently 83.06. Overall, we continue to have a breakout below the lower trend line of the same previously highlighted late July to mid-October ascending triangle. But even with Friday's performance, it all continues to be not a convincing break lower. Now, I had previously laid out potential targets below for such a pattern. Thus, the primary target X would be in the 82.45 zone, with a secondary hard to reach target X1 in the 81.45 zone. I nevertheless would still once again caution you on the possibility of false breaks here in either direction, just in case. Looking below the short medium moving average, we have the late September low at 83 even, and then the rising medium moving average at 82.75 as supports. Now, so far today, we're a lower opening with a test down to the next support, the flatlining short medium moving average, before an immediate pullback up over the extension of the upper trend line to the ascending triangle, currently at 83.21, though not as far as the October 2022 high as yet. I am now considering whether this move lower on Friday might also be another false break. US dollar against the Brazilian real. A bearish opening black Mariposa on Friday that opened again after the break below all the overhead resistances. The long moving average, currently at 499.21, the upper trendline extension, highlighted in purple on my daily chart, of the August to September rectangle pattern, currently 497.63, the flatlining short medium moving average, currently at 498.43, and the 50% Fibonacci line of the October 2019 to May 2020 move at 496.61, below all of those. During Friday's session, prices dropped and closed below the declining broken tine, currently at 491.82, highlighted in dark blue on my daily chart, and the slowly rising medium moving average, currently at 491.84. We also saw a dip below the 2021 low at 489.08, but without a close below it. Further down, we have support from the 50% Fibonacci line of the June 2019 to May 2020 move at 484.26. Then the lower purple highlighted trendline extension to the August-September rectangle pattern, currently 483.57, and the 50% Fibonacci line of the October 2018 to May 2020 move at 477.54. Overall, with last week's actions, we also saw a weekly key reversal down as the market moves back down within the breached, but ultimately still valid November 2022 to date bear channel, which is currently 469.83 to 515.46. It's highlighted in bright red on my daily chart. The most recent incident involving this bear channel had been the upper bear channel line capping the market in early October. I'd also like to add that the opportunity for the mid-September today action being a bullish halfway hesitation has now gone as well. US dollar against the Mexican peso. A third bearish black crow on Friday. As though prices moved lower, the support started to reassert themselves, and the true range was actually quite small. Not enough to be an indecisive spinning top, but enough to make me stop and think about it. Prices were capped by the August 2017 low at 1756.93 and the nearby rising short-medium moving average, currently 1757.33. With the market utilizing both in an ammunition gathering exercise, a lot of ammunition gathering exercises going on at the moment, and punching down through the July 2017 low below at 1743.62, and the slowly rising medium moving average, currently 1731.02. Though it halted soon after, seemingly not willing to test the lower down broken upper bear channel line, currently at 1722.77, was highlighted in dark blue on my daily chart, and the unusual neckline of the February to April 2021 head and shoulders top, currently at 1721.52. Now prices ended up closing just over the July 2017 low. Overall, this continues to be a more than suitable continuation to the break lower below the mid-September to date lower bull channel line, as well as below the late September to date ascending triangle. It also moved the July to September lopsided reverse head and shoulders pattern over to a continuation pattern instead of a bottom reversal. So, concentrating on the targets below, thus for the break below the ascending triangle pattern, for such a pattern we would have a primary target in the 1767.05 zone below and a harder to reach secondary target X1 down in the 1704.90 zone below. Now the primary target was reached last week. Next we have a double top for the action since late September to date, and we have, for such a pattern, a primary target down X3 in the 1736.45 zone, and a secondary hard to reach target X4 down in the 1703.70 zone below. The primary target was achieved on Friday. So far today, nothing much, looking like an indecisive doji cross right now, and it's sitting on top of the July 2017 low.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final important bit.